Good morning, welcome to the ADS Securities Markets Update. We'll start today with a look at the US economic releases, which came in with a mixed outcome, but mostly positive, boosting the US dollar across the board yesterday. First of all, the challenger jobs cut increased by the most in almost 2 months, rising by 42.7% in June compared to a decline of 22.5% in May. And the ADP non-farm employment change also came in much better than expected, adding more than 237,000 new jobs in June, while it had been anticipated to add around 218,000 new jobs. In addition to that, or moreover, May's reading has been even revised higher toward 203,000 instead of 201,000. The construction spending also came in with much better than expected, or double than the estimates, rising by 0.8% in May compared to a rise of 2.1% in April, while it had been anticipated to rise by 0.4%. However, this is the weakest increase in almost 3 months, which also led the banks, or some of the major banks, to increase their Q2 estimates for GDP for the US in the next few months. The ISM manufacturing PMI also beats the estimates, rising again toward 53.5 in June, up from 52.8 in May, while it had been anticipated also to rise toward 53.2 only. And this is the second monthly improvement in a row and the highest since January of this year. The employment index also increased by the most since December of last year, rising toward 55.5, which also is the second monthly reading well above the 50 key level in a row. However, the exports and unfortunately continued to shrink further, or shrank for the first time since March, declining toward 49.5. And finally, the price paid index remained unchanged at 49.5 for the second month in a row, despite the fact that estimates pointed to a rise toward 51.0. These figures also kept the optimism higher toward the US jobs report, which will be released also today. And the US dollar, or the US bulls, stepped in again, and the market may trade again within a tight range from now until the US jobs report is released, before the volatility started to show up again. In Asia, there was also one economic release from Australia, which came in with a disappointment, but better than the previous reading. The trade balance deficit narrowed toward minus 2.25 billion in May compared to 4.14 billion in April, while the estimates also were to decline toward 2.21 billion. During the European session ahead, also during the European sessions today, there are also few economic figures will be released today from the UK, including the nationwide house price index and the construction PMI. In addition to that, the Spanish jobs report. These figures are likely to have a limited and short-lived impact on the market ahead of the US jobs report today. Going forward to the key news for today, which is basically the US jobs report today. It will be released at 12:30 GMT time, which is 16:30 Abu Dhabi time. The estimates are to add more than 231,000 new jobs for the non-farm payroll compared to 280,000 in May. The unemployment rate is expected to tick lower toward 5.4, down from 5.5. The average hourly earnings, which will be the main key for this report, is expected to rise by 0.2% in June after rising by 0.3% in May, but the year-over-year is the key. Any decline below 2.1 or 2%, this also will be considered as a disappointment. In addition to that, it will decrease the chances for a rate hike in also September. In addition to that, or in addition to the jobs report, the jobless claims today will be released, and is expected to show some sort of like a slight decline toward 270,000 last week, down from 271,000 the week before. Finally, the factory orders is expected to decline again by 0.5% in May after declining by 0.4% in April. Going forward to a few technical analysis today, we will be looking at the euro. The euro also slipped to as low as 110.59 yesterday. However, it remains hovering around 61.8% Fibonacci retracement of this week, which basically we have seen a good reaction toward that level, and so far, which may hold in the next few hours. However, longs remains preferred for the time being, with tight stops, while the invalidation levels or such trade the invalidation level stands around 1.0950. In also the British pound, also we're looking at some of the short-term outlook remains or declined yesterday on less than expected manufacturing PMI and strong US data, reaching as low as 156.06. However, in the meantime, the short-term outlook remains bullish as long as the pair continues to trade well above its trendline support, which stand about 55.40. 56.40. Buying dips remains our preferred strategy for the time being, with stops also below that level or below 54.50. The dollar CAD yesterday also broke out finally or continued to rise further yesterday, reaching as high as 125.79 or 80s. In addition to that, signaling a clear breakout on the daily chart, suggesting a further gain in the coming days, or at least for today or until the end of the week. This also is because also the monthly GDP also hints for a possible recession in Canada. However, traders need to be aware of the US jobs report tomorrow, and the solid numbers should grant also another rally toward a 26.67. This is it for today. You can all follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic reports and analysis, and wait for our special jobs report today report on our social media. Thank you for watching, and I'll see you once again tomorrow.